Right, so that's about different asset classes and the wild gyrations in global markets across asset classes this year have investors questioning the timing of many high-stake bets just before key geopolitical decisions. Iran has directly criticized U.S. leaders of market price manipulation. The Hormuz disruption has led a general surge in crude prices. However, oil markets in recent days have turned extremely volatile. Headlines of potential de-escalation led by President Trump's remarks have led some relief moves. Benchmark Brent crude prices fell nearly 5% on Wednesday to trade around $99 per barrel. This follows a gain on Tuesday to above $100 per barrel level after having fallen below that level a day earlier. According to a Financial Times report, huge bets were placed 15 minutes prior to Trump's post about a potential peace deal. Now, the timing of those bets has raised questions of possible insider knowledge at play. However, officials deny any wrongdoing, even as these trades generated over $100 million worth of profit in just about 20 minutes. Similarly, a seesaw in stocks reflects a more nuanced betting pattern led by geopolitical headlines across markets. This week's trading patterns show that trend. At 7:04 a.m. ET on Monday, President Trump said the U.S. and Iran have had productive discussions to end the Iran war. By 7:10 a.m., that's in just 6 minutes, the S&P 500 surged 240 points, adding $2 trillion in market value. 27 minutes later, Iran completely denied Trump's claims and said there's been no contact with the U.S. By 8 a.m., the S&P 500 had fallen 120 points, erasing $1 trillion in market cap. Futures contracts on Wednesday point to a green open after Wall Street stocks closed the previous session with losses. Separately, reports found that newly created poly market accounts have made several high-profit, well-timed bets on U.S. geopolitical actions just before they were publicly announced by Trump. Those bets have led to widespread suspicions of insider knowledge. Iran ceasefire bets are not the first instance of such trades on poly market. Trades were placed just before the U.S. struck Iran on February 28th. Earlier in the year, one account created on Polymarket placed bets of the removal of Venezuelan President Nicolas Maduro just hours before Trump's announcement. The newly created Polymarket accounts have often displayed exclusive behavior. Experts and politicians have raised concerns that these trades belong to insiders with connections to top policymakers. Senator Chris Murphy has called for investigations into war profiteering. Reports also noted that Donald Trump Jr. sits on the advisory board of Polymarket's parent company. We earlier spoke to Mark Brolin, geoeconomic strategist, who spoke of a leak scenario where somebody close to Trump may have whispered the news.
Whereas actually, besides coincidence and besides insider misuse, there is also a third alternative, which hasn't been so much talked about, and that's a leak or someone close to the Team Trump orbit figuring out what was going to happen. And that's really hard to prove. And that might, if it would be a sort of a whisper going down the chain to someone close to Team Trump, then it's a criminal act. But if it's someone just figuring it out, then it's not a criminal act. And that's why it's so hard to prove in cases like this.
Right, now headlines of a truce do give hope, but markets are still anxious. What's keeping investors on edge is the demand for safe haven increasing and rate hike priced aggressively. Oil prices close to $100 a barrel keep inflation fears alive. Additionally, the usage of central bank liquidity is gradually increasing across the world. That suggests tightening conditions which threaten already fragile global economic growth. Recent signals that Iran may be open to negotiations alongside talk of a one-month ceasefire offer some hope. That said, a series of false starts and premature declarations of victory argue for continued investor caution. Rate hike bets are being penciled in across countries. Each day that oil trades close to $100 a barrel, inflation risks increase. as does the probability of rate hikes. Besides inflation risk concerns, other parts of the markets are flashing warning signs. Global bond yields are still trading higher than previous crisis peaks. That suggests safe haven flows are picking up. The current yield levels are on par with Liberation Day, and the momentum from the past few days suggests we may not have seen the end yet. Banks are starting to rely more on relatively expensive funding from the central bank rather than market sources. These signs clearly suggest that markets are being pushed out of their comfort zone, and only a significant decline in uncertainty and energy prices can alleviate the pressure. If not, financial conditions will deteriorate further and in turn weigh on the economic outlook.